Good morning. Today is Thursday, February the 16th. The time right now in Singapore is 11:42 in the morning. We are about 18 minutes more to midday. And overnight on Wall Street, we still see that the market is still basically consolidating. And overnight, of course, we have the release of the retail sales for the United States, and a figure came in a lot hotter than market expected. Now, if you remember, in December, the retail sales was negative 1.1%. Market expected January retail sales to actually edge up a little bit to 1.8%. Okay, and the actual release was almost double that amount at 3%. So on a comparison basis between December negative 1.1% and last night release of 3% for the month of January, we have a 4 percentage point move improvement in retail sales. Now, of course, that will be greeted with cheer on a normal market. Now, the market here is, of course, anything but normal. Of course, with this very strong retail sales, it means that the Federal Reserve, despite 10 months of very aggressive rate hikes, has not destroyed demand because retail sales is still charging away if the January number is to be believed. That means to say the Federal Reserve will have another problem at hand. So in the upcoming March FOMC meeting, they will have to decide, are they going to slow down the rate of rate hikes as they did for the month of January, for the month of February, because this strong retail sales suggests that they will have to continue to aggressively hike the rates in order to kill off demand. Now, with very strong retail sales, it means that Americans are still spending, and this is definitely not a welcome sign for the Federal Reserve in their fight against inflation. So the market now concern is what the Fed is going to do based on the retail sales number that we saw last night. Obviously, the expectation is that if the Federal Reserve continue to aggressively rate hike, maybe bump up the next rate hike to 50 basis point compared to February of 25 basis point. Of course, that will be a negative for equities. We will have to see how the market closes this weekend, okay, by tomorrow. Because as far as the Dow Jones is concerned, we can see that the Dow Jones so far, the market range has been very controlled. In fact, this is the second week in a row the market has been trading within this narrow trading band. On the downside is 33,581. On the top side is 34,342. So the market needs to break out of this very narrow trading band in order to tell us what it wants to do going forward. Okay, so based on the CPI number, which is hotter than which did not come off as aggressive as what market was hoping for, and plus last night retail sales so strong, there is that possibility the Federal Reserve may have to continue to hike rates again back to 50 basis points come March, which is next month. Okay, so over in the S&P 500, prices remains very buoyant, although it has not taken up the 2 weeks ago high of 4,195. So again, the market does seems to want to go up. We will have to see again based on these two numbers. I think the algos, whether the slow algo or the fast algo programs, are definitely key to take this market higher. So this is a little bit what you call that, anti-climax, because based on fundamentals, prices should be coming down instead of going up, but we can see the prices remains very firm despite the worrisome retail sales number that we saw last night. Over in the Nasdaq 100, the rally attempt has been even more aggressive. We can see on comparative basis, the Nasdaq 100 has actually been more constructive in the sense that the market wants to really take this market beyond 12,881. Okay, we can see that the market has a 3-wave rally. Technically, it has already hit my target, and we will have to see the next attempt to rally, how far it can take this market up to. If the market goes up beyond 12,881 and then reverse down to close the week on a weak note, that could be the reversal sign that we may have to watch out for. Okay, so for the time being, the market does look like it wants to go higher. Over in Asia, we can look at the Nikkei 225. Nikkei also have a little bit of buoyancy compared to yesterday's market, at least in the morning session. Appears to want to go up. So far, the market high has been on February the 6th, which is 2 Mondays ago, at 27,821. The market is still basically trading below that level and hugging between the February 6th high of 27,821 to the very supportive support line that we have been seeing. The market has been respecting this support line. So as you can see, the prices are getting between into an apex in which it will have to break up either to the top side or to the downside. Okay, so but for the time being, it does look like the top side seems to be a little bit more likely than the downside. But again, if that's the case, the next level to look out for with 28,195.7. Okay, over in the Shanghai Composite Index, you can see that the Shanghai Composite Index does wants to go up. You can see that it is already challenging the high of January the 30th, which is at 3,310. Market this morning, or at least up to now, market is at 3,308, which is 2 points away from taking out this high. And if it does, the next level in which the market may actually have to overcome will be 3,372 to 3,415 levels. This will be the equality levels, and if there's a case, there is every possibility from this area we may see the returns of selling interest here. Over in Hong Kong, market also attempts to rally from last night's, from yesterday's low. Yesterday we have a low of 2,726, so the market has fallen about 2,000 points, and the market is getting ready to rally. Based on the structure so far, it does appear to me, if we get a rally, the area of interest for me will be 21,712 to 21,950. This area may see the re-emergence of selling interest, which may take the Hang Seng a bit lower to test the 19,300 level, which is currently where I think the market may be heading next. Okay. Over in currencies, we can see that the dollar actually reacted a little bit, and dollar continues to edge lower yesterday night upon the release of the retail sales number, especially in the second half of New York trading session. And the market has failed to take out the most recent low here, which was January, which is Monday's low at 106.55. The market at best challenge, but couldn't take out the low here at 106.66. So we are about 11 pips away from taking out the low here, and the market started to rebound. So in the meantime, in the medium term, we will see how far this rebound in euro dollar can extend to, but I seriously doubt it can take out 108.04, which is the high traded on Tuesday. And my bias is to the downside, and if there's a case, I think the market may be heading to 104.80 or 85 levels. Okay. Over in sterling, we also have a continuation of the decline after market hit a high of 122.70. This is already hit on Tuesday, and although it did not quite take out the 119.61, but again, I think the bias is to the downside. I do believe the market may be heading to 118.40 or 118.45 thereabout. So I think near term, I still favor the downside. Let's see how far this rebound can take us to. Okay, over in Aussie, which I have already shorted, you can see that the market has taken out the near-term support line very decisively. Market currently is testing the underside of this support and resistance line. The low traded last night was 0.6865, and my target for the time being is at 0.6717. Okay, I'm going to take my profit and run with it at 0.6735. I'm going to be a little bit more conservative with my estimates. Like I said, I've already gone short on Aussie. And let's look at dollar yen. Dollar yen, of course, have taken out the high of 132.90, which was the high on January the 6th, 2 Mondays ago. And you can see that market now is charging higher, although there's a bit of a pullback currently in Asia trading hours. I think the 134.77 is probably not able to hold. Okay, based on this structure, now I have revised my initial outlook, and now I'm becoming very aggressive in terms of dollar yen outlook. I think this market has all the potential to go up to challenge 139, which is a 1.618 extension of this move. So 139 will be my new target for this next move in dollar yen. So you can see that I am basically quite bullish on dollar, but we cannot see the same thing in the dollar CAC, because dollar CAC is still trading within a very well-defined band, and the low side is 132.60 and the upside is 134.70. So between these 200 points, 200 pips range, the market will have to decide which way you want to go, and I will bet my money that is to the upside more likely than to the downside. Okay. Over in let's say in gold. Gold continued to slide overnight, and we can see the market traded to a low of 1,830.63 this overnight, and there's a bit of a rebound right now in Asia, but I think we are very, very close to where I think the area of demand is likely to re-emerge. It's likely to be at around 1,824 levels at mid-range. Okay, you can see that there's a pivot point somewhere around here between 1,823 90 cents to 1,825.16 cents. So I will take an average about 1,824 and a half. Okay, so I think we are getting close to this bottom, which are, I would say bottom, I said suspected area of demand. Okay, so be very careful chasing this gold market much lower than where we are right now. Okay. And of course, silver it continued to slide in tandem with gold markets, and the low traded last night was $21.43, and we have a bit of a rebound. But I think silver still have a bit of more room to decline relative to gold, because I think the bottom is, or at least the area where I think demand may re-emerge, is going to be at $20.58, which is going to be still some way off from where it was last night. Okay, so do watch out for a gold market. And in the energy market, we can see that energy managed to recover from the low last night of $77.25 on the news that President Biden has again want to draw down on the strategic petroleum reserve, which is already at record low compared to 2021. And at the rate they are drawing down this reserve, it means at some point there will have to be a major buyer to replenish the stock that they have drawn down throughout the whole of 2022. And if the new drawdown is going to be included, that means this US petroleum reserve is going to be at dangerously low level. They have already mentioned that at $70 or lower, they will start to replenish the reserve. But whatever we are looking at, the market is nearer to $80 rather than nearer to $70. So that creates a dilemma. At $80, of course, they cannot afford to replenish. They want to replenish the stock below $70. What they do is they release those reserves in a move to pressure the price lower. But I think the market is not buying that, because the market is looking beyond the possibility at some point the US will have to aggressively replenish their petroleum stocks, and that means this market is bullish. So if based on this reasoning, we should be able to see higher prices in the weeks ahead. Okay, if this is the case, I think the market will have a chance to take out $82.66 to go all the way, at the bare minimum, to go to $84.83 to $86.43. So do keep this news in the background when you are trading energy products here. Okay. Let's go down to the cryptocurrency, which is the best performance last night. You can see there's a very aggressive short covering going on last night. There was no particular catalyst. Okay, this is basically, I think, brutal short covering. The market is trying to trigger all these short orders, shake these weekends in the short markets off by taking the market a lot higher. So I think this is definitely got to do with very, very aggressive, very brutal play, in the sense that they are trying to drive prices out to take out all the weekends in the short sellers. Okay, so the high traded this morning as of now is at $24,000, almost $900. This is the highest since last September, and based on just the technical outlook, it does looks like there is a little bit more upside to go before we can see prices come off, unless later on in the day we see some profit taking that takes the prices back down. So in the meantime, we can only go with what we can see. The market now is, of course, very biased to the upside. Like I said, there's no particular catalyst. Okay, the market is just taking the market higher. Okay, over in Ethereum, we still have Ethereum not able to break out of the previous high, which was last traded on February the 2nd, $1,714.10. The high this morning as of now is at $1,712.10, but $2 away from the previous high in February. So we will have to see. It is not as strong as what we saw in the Bitcoin itself, but so definitely the market here is a little bit more sensible compared to those in Bitcoin. Okay, even for Solana. Solana is mimicking what we are seeing in Ethereum. The market has taken out this near-term resistance line. Yes, it is bullish for now, but it is not able to take out the previous high as yet. There's a minor high here on February the 8th, okay, which is 2 Wednesdays away, and the high then was at $24.23.5. So the market is just barely below these numbers, and it's stored at $24.16 this morning. Okay, over in Cardano. Cardano is mimicking what we are seeing in Bitcoin. Okay, the high trader is 0.421, which is the highest we have seen. Let's go back to the daily time frame and have a look at how far Cardano has come. Cardano went up to a low of 0.239, and that was in this on the last day of December. Okay, so over the last 1.5 months, you can see Cardano has risen quite a fair bit. Okay, and it's on the way to challenge this previous high here, which we saw on October 29 at 0.440. So upside immediately, if you want to chase this market higher, do be aware that there's a resistance at 0.440. Okay, so again, if you have not already bought, this is the lousy time to get into to buy right now. In fact, as we approach nearer to 0.440, the odds is going to shift to the seller. Okay. Okay, this is all I have for you for today. There is no major release for economic numbers for today, especially for the States, and that applies for tomorrow as well. So we are likely to go into a technical trading kind of activity for the next 48 hours, including tonight. So until tomorrow, I shall say goodbye for you now. Bye-bye.